Al, as we continue this discussion here on the second segment of Investing with Confidence, we all know that the smart money is moving these financial markets. It's the big money, the Goldman Sachs, the JP Morgans, the Buffetts of the world, right? They move the market. So it's important to understand how they do that, but then learn techniques and strategies to trade with them. You mentioned in the beginning, we can't trade against them. We have to trade like them or follow the smart money. Now, the stock market has been soaring lately, which really means the stock market is very expensive. Right. Now, there are techniques, or I should say assets, that the smart money is using with the stock market. You have options, futures, and Forex. Let's start with the futures and Forex market. Now, these are leveraged asset classes, which means they have buying power. Let's dissect that a little bit. Why might somebody want to gravitate towards the futures market? Because we see so many people looking to utilize this leverage.
Yeah, let's talk first of all why people might look at those assets to begin with. Why the futures market, the foreign exchange market, or the options market? Well, a lot of people, in fact, a lot of the students that come into our classes, they say that their interest, with their goal, is to generate more income. And that's their top goal. Well, when we're talking about income, what we're talking about really is the net result of short-term trading that includes your wins, losses, and then any commissions or cost of trading. And the problem with what Wall Street does for most of their clients is they put them into a strategy that is really more long-term. It's that buy and hold strategy, which is something that they emphasize the fact that you are looking at this as a long-term investment. Look at it for decades, not just this year or next year, what's happening. But if you have short-term income goals, it's pretty hard to do that with a long-term strategy. So the short-term strategies that are available are within the options, the futures, and the Forex markets. And those are available to everybody. And one of the reasons that things have changed over the years is the access to those assets has become achievable for all of us as traders and investors. But still, Wall Street is putting people primarily into a stock or a mutual fund portfolio, probably more mutual funds than stocks, which again are long-term. Well, there are some great benefits that are available for short-term trading with these leveraged assets. And number one is that they're really they increase the value of your investments. A smaller account, like a down payment, can be utilized to control a much larger investment. So you're really maximizing the value of your capital. That's where the leverage comes in. That means every dollar you have, there's a multiple of that dollar that can benefit you in these markets. The other thing that is available is the ability to trade different directions. Now, most people are in a portfolio that will only benefit them if the market goes one direction, and that's up. If you think about it, if you have a mutual fund or a stock, how do you benefit from that? It has to go up in value. They don't always go up in value. They sometimes go down, or sometimes they just stay flat. These assets like futures, Forex, and options can be used in all three directions.
You said that upward a couple times. You're not bringing back Cardi B, are you?
Never again.
Well, think about this too, Al. These markets, having them open 24 hours gives more opportunities in the evenings too.
Right. That's another advantage with futures and Forex. They are available essentially 24 hours a day, so you have many more choices as to when you're able to do this. If you have a job that keeps you kind of occupied during the 6.5 hours the stock market's open, it's kind of hard if you're going to be looking at utilizing something on a short-term basis.
You're right. And just to give some example on the leverage Al is talking about, in the stock market, for every penny, the investor creates a penny, right? In the futures market, price increments are a tick. So, for instance, if you're going to trade the S&P 500 and you want to move one price increment, that's actually $12.50, or 1 point is $50. That's the leverage that allows you to utilize. And that's the great thing about the futures market, is that leverage, but also it being open 24 hours a day gives the average investor, the average person, the opportunity to trade and invest any time of day. I'll cover the Forex market now, because that's the largest and I believe the best market that's out there, because the leverage, 24 hours. Explain what that is and why might somebody want to gravitate towards that one.
Yeah, the Forex market, that's the foreign exchange market, where you're looking at the difference in exchange rates between two different currencies. It allows you to trade on a global platform, a global strategy, to take advantage of what's happening in other countries. That market really was intended to be used by large international corporations that need to be concerned about the currency values in the countries that they deal with. So we can now utilize that market as traders and investors, and it can be used both kind of in a short-term method and then also long-term, because oftentimes the trends in the movement of these currencies can be long-term. So you can use it in your retirement accounts, and you can use it for maybe what we would call swing trading, which is maybe a few days to a few weeks to maybe a month or so. So you have some versatility there. Josh mentioned 24 hours. These markets are open 24 hours. It is the biggest market in the world, trading over $5 trillion a day. So there's a lot of liquidity there. And all of the things that you mentioned, ticks with futures, well, all of these things that are components of these different assets, those are the things that we teach. And so people, I think, hear about things like that and they shy away from it because they have no idea what we're talking about. And that's true of anything that you haven't done before. So the education is available. And the interesting thing is that almost everybody that comes into our classes knows about the stock market, knows about mutual funds, and that's what they think they're going to be investing in. But their choice, after they hear about these other assets, these leveraged assets, and what the benefits are, that's their choice, is to utilize one of those three. And the great thing is that depending on what your goals are, what your expectations are, one of those three might be better suited to you. And education at the Online Trading Academy is available in all of those assets. One thing I want to mention again about the futures market, you started to talk about some of the components. You mentioned the stock markets and commodities.
Sure.
One of the things that is important in investing for anyone is to be diversified, properly diversified. Wall Street will tell you that their diversification, that's their protection for you, is just having a number of different stocks or a number of different mutual funds that cover different segments of the economy, different industries or sectors. The truth is that when the stock market corrects, everything in the stock market has a high correlation. It's sort of like a bathtub. When you pull a plug on a bathtub, all the water is going to get sucked down. Same thing happens in these markets. In the futures market, the commodities really have very little to no relationship to what's happening in the stock market. So you can trade grains, you can trade your favorite lean hogs, you can trade oil, gold, silver, currencies, interest rates, a number of different things there. Maybe you utilize the Forex market as a diversification if you have some stock holdings. Or maybe you're trading options and you also use the Forex market. You can trade options on futures, you can trade options on the foreign exchange trades, you can trade options on stock.
Yeah, well, think of it this way, too, with the greenback, the United States dollar, devaluing for the past, 50, 70 years or so?
Sure. Mm-hmm.
And not hedging yourself on that. So because every dollar that we have is losing value every single day. And going back to kind of some of the components like we talked about in the futures market, in the stock market, every penny movement in the market is 1 penny. Every penny in the Forex market is considered every movement price increment is a pip. So for 1 penny, there's actually 100 price increments. So that's the leverage that you're allowed to utilize there because you have that 50 to 1 leverage, but also that one as well being open 24 hours a day. And Al kind of hit the nail on the head. You have more versatility in your accounts, whether it's in your income account or your retirement account. Al, coming up next, I want to continue the leverage talk. We got it through the futures market. We got through the Forex market. But there's so many people that want to understand more about the options market. What are my options in retirement? Because options is what most people that are hedging portfolios, that are protecting their portfolios, are using options. Let's talk about that in IRAs and 401ks. This is Josh and Al, Investing with Confidence. We will be right back.